Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're doing well. Pretty much blood in the streets kind of day for Canadian MJ. We've now dropped over 30% in 5 days on a lot of these huge names. It shouldn't be that surprising. The speed of it should be surprising. It's definitely a fast drop. But if we look at the history of CGC, every time that we've hit an all-time high, we pull back 50%. I shouldn't say every time, but the last two clear times, we went from 14 down to 6, and then we went from 36 essentially down to 16. So here we are from 59 now down to 40, or make that, yeah, just under 40. So that is about a 32% drop or so. And at this point, we do have a price target point of, I believe it is $48 on WEED that the Constellation deal went through. So that's definitely a psychological level. That's a fundamental support level, essentially. So we're obviously looking for the oversold bounce, and we were prepared for it at the end of the day because it has played out like this in the past, and the play has shifted essentially. So the market adapted, and we adapted with the market. What I mean by that is the oversold bounces used to be with a weak close at the end of the day, with a gap down open, and then a final flush, and then solid V-shaped recovery bounce. And that happened a half dozen times at least. We played it a lot. I made videos about it, and I think the market smartened up, and everybody started to anticipate that. So now we have people anticipating those weak closes, and they lead to the bounces happening in the afternoon. So we had one of these oversold bounces start in the afternoon last time. And so we said today, all right, things are getting really extreme on the hourly. I can't imagine that we're going to close weak and get a gap down open, because that's going to put us near single digit RSI levels. So this is the kind of setup where we're looking for the afternoon bounce to get going again, as we have seen in the past. So on the daily chart, actually, it was the hourly that we were watching after the video from the weekend. We said CGC and CRON were similar, and APH and ACB were similar, and we were watching the hourly oversold bounce attempt. Now, using extended hours, after hours and pre-market cooled off the RSI levels. We were right at oversold. We cooled off all the way up to 45 RSI. Started the morning, we dumped down to lower lows, and I just sat back on my hands, patiently waiting for things to get oversold. And once we started getting down to the teens in the RSI levels, I started adding. And my intention was to establish a large position for when the hourly bounce does begin, because we know it's going to be a solid bounce. And at this point, again, 30+% off of the all-time high in 5 days. You saw all the negative articles come out over the weekend. Not surprising at all. That's timed, absolutely. And to think about what's going on in this dump, psychologically, you have supply and demand. Supply of shares is small, demand is high, heading into the first day of legalization. All of a sudden, the first day of legalization comes. Who is left to buy? Everybody that's going to buy has bought before legalization. CNBC made sure everybody heard about it. So as soon as that date comes along, there's no demand for shares, and supply is high. So supply of shares crushes the market. It drops 30%. Because nobody wants to buy these shares right now. And now that we're getting to these extreme levels, those of us that took profit on the way up into the sell the news event are looking to reload. So a lot of us today were buying the dip. And again, my strategy was just slowly scale in, because we were in free fall, and I entered my first position, perhaps 41.50. I entered a 20% of my entire account. And as soon as $40 broke, I doubled down to enter 40% of my entire account. And then I was just patient, because I absolutely wanted to have cash into tomorrow in case we see a lower open. And then I would continue adding aggressively if the bears continued aggressive as well. So at this point, I had a 40% position, which is twice my normal position of what I day trade CGC with. So I'm in a scenario psychologically where I say, all right, if the bounce gets going in the afternoon, that's great. I'm going to have profit. It's going to be a great time. If it does not get going, things are going to get extreme. The hourly RSI is going to approach some of the lowest levels we've ever seen. And I have 60% cash ready to continue averaging down and to go very big on this bounce. Because again, you're not going to dump 30% from an all-time high and not see a bounce in the very near-term future. So the bounce did get going. What were the signs of the bounce? the volume climax, and the flush below the psychological $40 level. At that point, the 5-minute RSI was down in the teens, the 15-minute RSI was down in the teens, the hourly RSI was in the teens, and the 4-hour RSI was down in the mid-20s, low 20s. So at that point, again, I was comfortable adding again. And then we had the second candlestick. We had the dump, and we took it all right back. And that 5-minute candlestick is the most bull volume that we saw at any point on the day. Also, look at this 12-period exponential moving average resistance. I use this in cryptocurrency trading. Look at the 5-minute time frame reject the entire day from this exponential resistance until that flush climax. So the 15-minute time frame gave us a huge volume climax and a bullish reversal candlestick, which eventually went into a trend change of a higher low and a higher high. And again, the 5-minute time frame, the very clearly the most notable volume and the most significant bull bounce that we had seen at that point. So at that point, I actually didn't lock in profit there. And that's because I anticipated more follow through on the bounce. I did lock in profit on this move. I exited half of my position. And that's to remain cautious because now on the hourly time frame heading into the end of the day, we've bounced enough to cool off RSI levels. So my reason for being in the trade is RSI levels. And if those RSI levels are no longer at the point where I was comfortable scaling in, that means my reason for being in the trade is no longer the case. We can obviously see some follow through, but I want to start locking in my profit because the technical setup is following through on the bounce as anticipated. So again, I locked in half of my profit. My average was probably 40.50 and I sold maybe 41.50. And I'm swinging half of my position, but I'm very comfortable now with my entry point and my average, especially because I took half profit. So this could absolutely be a bear flag. And the reason I'm not more confident in this bounce following through is the S&P 500. And the S&P 500 is still weak. Let's look at that real quick. The daily time frame is close to dropping. It's not close to dropping to a lower low, but that's definitely what's on the bear's mind is a lower low. And really it's the financial sector. So you might not realize it, but unless you're watching the whole market, you're not realizing that the financial sector is negatively impacting your Canadian MJ stocks. And the reason for that is the tech sector, the financial sector is right down to test the low of this dump from last week. And if we drop down, it's just a lower high and lower low. The financial sector has changed the monthly trend with a lower high and a lower low for the first time since the election 2 years ago. The financial sector is the second highest weighted sector in the S&P 500. It has a huge impact. The only reason the market is not dumping right now is because the tech sector is holding on strong. So the financial sector was the reason for market weakness. It was the reason for a magnified bearish move, in my opinion, on the Canadian MJ sector. And it's something that, it might seem like you have to be watching everything. And in a sense, you kind of do in order to have a firm grasp on everything that's going on. So here after hours, CGC is pulling back. The ask right now is about 0.5% below where we closed. That's SPY after hours. Here's CGC after hours. So we're pulling back a little bit. I'm watching the 15-minute bounce. So we have the low, the high of the bounce, higher low, higher high. Anything above $40 is a higher low for these bulls to keep that bounce going. And new resistance right now is 42.49. TLRY just came out with news that it issued. That was an opportunity. I knew it. I saw that news come out for TLRY 5 minutes ago, and I thought, how are we not seeing a bearish reaction? Because it's issuing an additional 25 million convertible notes. That's not a huge amount. It was 450 million. They issued an additional 25 million, but the price didn't budge, and now it's down about 1% plus from where it was sitting once that news came out. Fidelity is really good about issuing news right away. And I've been in chat rooms a long time, and it seems Fidelity is one of the brokers that gets that news out first. So CGC needs a 15-minute higher low and then a bull break of 42.49 for any bounce continuation. And in my opinion, the S&P 500 is going to dictate whether we see a CGC higher open or a lower open as we head into tomorrow. We closed weak on the S&P 500 thanks to the financial sector, and we're seeing weakness after hours. So we have to see a higher open in SPY. Otherwise, CGC is likely going to see a lower open. Bears in this market right now are anticipating just an hourly lower high to form, and you better believe they're going to be ready to pile back into these positions once the hourly RSI and everything is cooled off. So right now, bears are saying, is 42.49 our lower high, or are we going to get some more bounce follow through into the mid 40s for us to try and re-enter some bearish positions? So in my opinion, Again, this is why I took half my profit. I don't trust the market bulls right now, the S&P 500, and I do believe it has a more significant impact than a lot of people are giving it credit to, especially with where we stand right now. So I'm going to have my eyes glued to the S&P 500 tomorrow. I will very quickly exit all of my position and go back to all cash without batting an eyelash, because I'm just going to lock in that profit, because there is no doubt I am trading counter the trend. I just really like oversold bounces, and they've worked really well in the past, but I will cut this loose real quick to not give back any of, well, I'll give back a little profit if we have a weaker open, but not going to go in the red at all. So that's pretty much where we stand. Watch SPY, and let's see if we get a higher open on SPY or a lower open, and I bet that's what we do for the Canadian MJ sector as well. There's our resistance. 15-minute time frame is the most clear in the short-term levels to be watching. If the bulls do get a bull break, 43.45 is the next resistance level to be watching. CRON was in a similar setup to CGC in terms of the hourly oversold play heading into today. We got the all-out dump. We flushed down pretty significantly. We ended up bouncing 5% plus from the low, so it was a nice bounce. But again, you look at the hourly chart, that can be a bear flag. Look at the hourly RSI cooling off. The daily time frame for CRON broke support. Key support of 868 broke. Look at where we are now. We're down to levels that we have not seen in a very long time. And in fact, we broke to the lowest price that we've seen in multiple months on CRON today. The next clear daily support is 762. I do not believe that these bounces are going to be off of clear support levels. I believe that these bounces are going to be dictated by the S&P 500, as I just voiced. So it's important to note where support levels are, but I don't think, if CRON's going to head to a key support level, but the rest of the market's seeing weakness and SPY is seeing weakness and the rest of the sector, it's not going to matter. So I definitely look at what these support levels are, but I take them with a grain of salt, because I know we can dump right through them and then bounce right after we break them if that timing lines up with SPY. So SPY for me is more important than hourly or daily support levels. So for the bounce on CRON, same thing. Let's look at the 15-minute. We don't have a clear higher low. This bounce originated from 823, and it just followed through the entire way up to 867. So that's the range to be watching tomorrow. If 823 breaks, it's very clear that the hourly RSI just cooled off and we have another leg lower. I don't expect too much further downside, even if we do drop to lower lows, but obviously I'll want to be all cash to be able to reload cheaper. So for the bulls here, we have to hold a higher low compared to 823 and see a bull break of 867. And the next resistance after that is 904. When these bounces get going, looking at where we are on the daily, we're going to see solid 10% plus bounces. It's just not the market environment that's giving us confidence just yet at this point. APH and ACB. So we headed into the weekend saying, all right, the 4-hour equilibrium is the setup. We got the lower highs right, but we didn't get the higher lows. So I was wrong in terms of the most likely setup, and that's going to happen all the time as a trader, but I lost $0 because of that, because the trade setup was not there. There was no entry opportunity. I mean, the only entry here would be bottom fishing 1677, but that dump happened so fast that it was clear that support level was likely to break. So I noted over the weekend, what's the most likely scenario? If SPY if CGC and CRON got the hourly oversold bounce before the support level broke on ACB and APH, it would be a really nice 4-hour equilibrium. That was not the case. We are magnified to the downside in part due to the S&P 500 weakness, and that led to lower lows on these names. So knowing the most likely setup and then recognizing the changes today certainly prevented from premature bullish entries. So the next support levels, again, we're breaking lows that we have not seen in quite some time. There's a little gap here at 1487. And actually, I take that back. That's not a gap. That gap was filled back then. So the low of this pullback is 1520. Then we got 15 psychological. 1334 is the next very clear support level. If we're looking at the longer term time frames, this is now a weekly lower high and lower low. So that tells us more significant consolidation is coming. Again, this sector, it's entirely possible it could consolidate for months. We have to prepare for that. And there could be news releases and deals that change sentiment and shift things quickly. But as of right now, we are entering consolidation into the end of the year, and we have to be cautious and aware that this can last multiple months. So for APH, the 15-minute bounce, it's a very weak one. I looked at the hourly level. I looked at the hourly bounce attempt on APH at the end of the day, and I said, man, that looks a lot like a bear flag. And that honestly, it made me less confident in the other names here. maybe less confident in CGC because APH was showing so much weakness. So the 15-minute range is 1520 up to 1643. It's a solid bounce. The opportunity was there, but a lot of people took profit. And actually, I want to point that out. Look at CGC at the top of the bounce at the end of the day. What stands out here? This volume, 5-minute volume climax marking the top. I zoom into the 1-minute time frame and say, is that all bear volume? And the answer is yes. Look at the first 2 minutes of profit taking, significant bear volume exiting before the end of the day. And here we have weakness after hours, and those people can now rebuy at least $1 cheaper from their exit at the top of that bounce. So that notable bear volume stood out to me. And look at the bear volume here compared to bull volume at the start of the bounce. It's notable bear volume. So again, just lacking confidence for the bulls for follow through right now and remaining cautious because again, it's against the trend. So the bulls need a higher low, ideally holding 1545 and seeing a bull break of 1643 to try and change this 15-minute trend with further follow through. Keeping in mind that everybody is going to set a lower high on the hourly. For APH, anything under 1863 is a lower high, and that's almost a 20% bounce. For CRON on the hourly, anything under, now it's all the way up here, anything under 988 is a lower high. And for CGC on the hourly, anything under 4813 is an hourly lower high. So this hourly trend is not going to change anytime soon on these bounces. So we're going to bounce and set lower highs, and then to change the trend, we'll need higher lows, holding the low of today, and then continuation. ACB, so the 4-hour lower high and lower low follow through. The daily uptrend has been lost. That was actually lost 3 days ago, so that was an early heads up. Next support level is down at 1018 and 10 psychological. 15-minute range to be watching, 1064 support. We formed a higher low at 1080, and resistance is up at 1176. Almost a 10% bounce, very solid bounce. Bulls have to keep up 15-minute higher lows and higher highs for this bounce to get followed through. And if we can break 1176, we're looking up to 12 psychological. But again, you look at the hourly chart, this bounce, anything under 1351 is just a lower high. So a lot of work for these bulls to change momentum and change trends. There will be nice bounces on the way down, but not confident yet that this bounce is going to have significant follow through. And watching the financial sector in the S&P 500 for clues. TLRY on the daily, very clear bear break of 142 support, 141 support. 122 broke support as well. The daily uptrend has been lost. Let's go to the weekly. So there's our weekly uptrend being lost. 122.13 was a very important level. And now there's a lack of support. The most important level at this point is 97. That was our double low. We've held 97 on 2 touches of consolidation. If we were to drop to 97 early this week, that would be another potential bottom fishing play to be watching for. But it's the same thing. Look at the 15-minute bounce. Decent little follow through at the end of the day. 115.50 support. Resistance up at 124.40. And on the hourly time frame, anything under 147 is a lower high. Same thing. Hourly trend is not going to change anytime soon. Ideal scenario for the bulls is a higher open tomorrow, an hourly lower high being set compared to highs of today, a higher low forming on healthy consolidation, holding the low of today, and then continuation. That's the ideal setup for the bulls, and they need the S&P 500's help, in my opinion, to see that follow through. A lot of bearish reactions in the small cap names. And the video over the weekend, it was very clear. A lot of those names were in trouble, and we just saw a ton of follow through. You look at names like Fire. I think I highlighted Fire as one of the weaker setups. And the dump that we've seen the last 5 days, 224 down to 146. Huge pullback. Did the USMJ video, and one of the highlights in the video, I'm keeping that members only for now, but we'll post that towards the end of the week. But one of the highlights of the video was, the market is the weakest it's been. The S&P 500 is the second weakest it's been since the presidential election 2 years ago. Canadian MJ is selling off. These US names are correlated to Canadian MJ. They're about to get a whole bunch cheaper, which they're certainly doing. MedMen at one point today was down, almost 20%, and it ended up bouncing 10% from the low of the day. The bottom line is, if you're looking to the US sector, you're loving this consolidation. And there are a lot of people that are moving their Canadian profits, towards the USMJ sector. So that's something to keep an eye on as well. The correlations are definitely still there, and we're not going to be able to see those correlations shake, in my opinion, until we get some significant US news. Likely politically will be required, but definitely keeping eyes on that sector. Not in any rush to establish long-term positions, so not in any rush to act on fundamental research, which means I'm going to take my time and do some nice in-depth fundamental research. I hope you all have a good day. We'll check back in tomorrow. Do good things.